Hi everyone, I'm Nestor Palao from Sygnum's clients team speaking to you from our Zurich headquarters today. I'm glad to welcome you to another exciting crypto market update. As opening disclaimer, this market update may include forward-looking statements and that should not be taken as investment advice. Today, 17th of October, we want to particularly look at the events ahead of us for the digital asset markets in the fourth quarter of the year. History never repeats itself, but it does often rhyme. So looking backwards, we see that the month of October has usually led to certain seasonality, being this month the best performing in history for the digital asset markets. Basically, we had one only negative month out of 11 recorded in history. In contrast, if we look at other historical performance of Bitcoin during the entire fourth quarter, not only the month of October, the performance has been mixed, with 7 out of 11 years of trading history with positive returns, while 4 out of 11 with negative returns, hence basically showing a high dispersion of returns. So far, the fourth quarter of the year started with a positive 4% performance to date, so already a good kickoff for the quarter. Looking now forward, we see two major drivers of momentum for digital asset markets at the moment. From a macroeconomic perspective, we see the outbreak of the unprecedented geopolitical conflict in Israel and Gaza, which adds to the long-standing conflict in Ukraine and leads to a growth in the concerns of investors. This has led to a flight to quality, as Larry Fink, the BlackRock CEO, outlined publicly yesterday in media, and what we see materialize with a very significant amount of inflows into US treasuries, the US government bonds, gold also over the past 2 weeks, showing almost a 5% price increase, as well as what we see supporting the trend for Bitcoin, or at least helping sustain the current levels for this asset. From a micro perspective, and particularly looking at what concerns crypto specifically, we have seen a constant flow of news, especially over the past few weeks, relating to the opening of proceedings against the former CEO of FTX, Sam Bankman-Fried, in relation to the bankruptcy estate. We all know basically the events surrounding FTX last September, that led to the bankruptcy of the famous crypto exchange. Now formal proceedings have been opened against the CEO. As part of this now, there are different courts judging his participation and his actions on these. And this is leading to a lot of news and events surrounding, the events that led to the bankruptcy state at the moment. At the same time, it was announced publicly yesterday by the chief restructuring officer of the FTX debtors group, John J. Ray III, that is expecting a customer settlement plan to be proposed by December of this year, by the middle of December this year. And if approved by the bankruptcy court, could mean that the settlement for the customer litigation could end by the second quarter of 2024. This will mean that basically, in this case, a redistribution of assets that are currently estimated at 8.9 billion to FTX customers could start by the second half of the year, which is very positive. We have seen also the bankruptcy proceedings against the famous crypto lender BlockFi coming also to an end over the past month, which also provides a certain light at the end of the tunnel for investors, in the sense of accessing their assets and potentially also having new flows into the market. On a different front, we see as well that the attention of the market is at large on the run for the Bitcoin ETF. There are currently 8 issuers in the race, including several large asset managers, including Invesco, Banek, or BlackRock. And particularly yesterday, we saw a false alarm of the SEC approving the BlackRock filing, which ended up moving markets 7% in a matter of 1 hour, but was rapidly corrected as it was denied by BlackRock directly that these claims were incorrect and they have not received yet any approval from the SEC. In any case, this shows us testament how much attention at the moment the market is putting into the ETF approval and how much of the volatility in the market is around these events. Finally, as insight from our trading desk, we are seeing the buy versus sell ratio picking up across our clients, which shows some initial momentum and especially growing interest ahead of the next Bitcoin halving in April next year. Still, we see that volatility, as mentioned before, goes around all the different events on a micro, especially the ETF approval and all the different events surrounding FTX at the moment. Other than this, we continue seeing significant action on traditional securities with the de-risking of our clients' portfolios into traditional securities in search of yield in the case of bonds, especially that are at the moment attractive compared to previous scenarios, especially when we look at the 10-year US Treasury bill, for example, with a yield of 4.56 at the moment. This is all for today. We look forward to your questions, and please do not hesitate to reach out to us in case you have any further queries. Thank you so much.